Good morning, everybody. Hope you had a great evening. Wow, what a cool down we had here in Wichita yesterday. We went from 102 last week and mid-90s over the weekend. 55 degrees yesterday with the wind blowing 20 to 30 once again, and broke out the jackets for our evening walk. Henry loved it. He ran and he ran and he ran and he ran. Back when it was 95 or so, I could turn him off the leash where he normally runs like a maniac, and he'd just kind of look up at me and trotted along. So Henry's happy. Interesting market overnight. We did not break, given the new record highs in the E-mini and new highs once again overnight. The market actually early, a couple hours ago, traded back up to the 27 level. We have a B from yesterday. We have a B in the overnight session, so I think the trade is to sell into early strength. But if we find that the market can't crack that 16 to 20 area, maybe we're back to the dynamics we had last fall, where both the stock markets and the financials can trade higher and lower lockstep with each other. The economic news overnight, China's economic numbers came in lower than forecast. German and the European Union's investor confidence both were really, really big misses. The talk was the German export market is feeling the effects of a higher currency. The euro was off overnight. So the European Union wants to export outside of the European Union, so they have a chance to better their economic growth numbers. China is trying to engineer a soft landing in the real estate market, where we get reports of see-through cities, where you have these great big magnificent cities actually built with no occupants. So they've got their hands full with that. So the world's banks and the world's central banks all still are maintaining economic growth forecasts of 3 to 3.5%. In combination with China expected to grow in the 7.5% range, Europe somewhere north of 1%, and the United States at 3%. Blend them all together with China's numbers, we come up with a worldwide economic number of 3.5%. As I've said many times before, it's not in the world's central banks and international banks policy book to ever forecast negative economic growth. It always has to be positive. So we're seeing that. The other thing that could be driving the equity markets this week is a short squeeze. Option expiration comes along this week. The short interest and short players have been making a lot of money over the last month. They're under the gun today. They'll either have to back those positions or buy their way out. And large institutions' policies, when they no longer like a position, they dump at the market. They don't care what the price is. They've just learned through the hard knocks of experience that when a security starts to move against you, it can really move against you. There is no graceful exit. Dump it at the market, take your lumps, and start all over again. So a short squeeze in the indexes is there. The indexes are all making new highs. Cash made new highs over the last 2 weeks. The indexes are catching up with them. They're being pulled higher by the cash. The focus will be high-frequency trading on the New York Stock Exchange this morning post the retail sales news. Retail sales expected up 0.4. Ex-auto up 0.6. Ex-auto and gasoline up 0.5. Import prices up 0.2. Import prices up 0.4, export prices up 0.2, and business inventories up 0.5. The focus will be retail sales, ex-auto, and that's plus 0.6. While it is below last month's number, it's a pretty healthy number in and of itself. If it does come in this way, it'll add more fuel to the fire on indexes, and then we'll get to see if financials are going to break. I think part of the problem that we have right now with the financials is yeah, the stock market's higher, but on what? First buy zone is 16 to 20. I lowered it from 17 to 21. I think we can go a little bit lower, but this market has been really, really difficult to buy. We have not been able to buy on the cheap. We've had to pay up to get in. And when it is broken, it has been limited. You have not taken out normal numbers. Buy 2 will be 9 to 13. Okay, top of value is 26, so we're selling the 26 to 30 area. And then we're going to, if we get through that, no reason not to get it way back up to 125.04 to 125.08. Best resistance is 25 even to 25.04. The most recent high is 06. So we've got a B, 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 like the sell side first. Okay, if the market is weaker than I think, the high volume numbers at 23, depending on the reaction to the news, leaning against 23, maybe the trade too. We'll have to see. But right now, because the financials are not reacting as you would expect them to strengthen the E-mini and the economic news, that something's amiss here. I mean, I think the financial players who really are fundamentalists look around and they see all sorts of reasons not to be long the stock market, other than technical momentum. This is what makes this game so interesting. I mean, every day we got to come in and try to figure this out. The markets are always the same, but they're always a little different. And the focus, a master trader or somebody that's at the top of the game, knows which tools to select and knows which news or which piece of news or which fundamental sector of the market is driving the markets. Knob spread widened a little bit overnight. And again, just if you ever wanted to put a limit sell, lean against these high volume numbers. And that high volume number is at 35.20. So our first sell is 19 to 23. And then 27 to 31. Market has been hard to buy. The knob spread is up. Yesterday's low is 4, so we'll make 1 to 5. I think we can go a little bit lower by 1. And then 25 to 29 by 2. And the focus will be the E-mini's reaction to retail sales. It's nice when we have news because news helps us out 2 ways. One, if the market reacts as it's supposed to the news, then we get an easy answer. It's pretty easy to make trades with that knowledge in mind. If it reacts the opposite of the way that it should, that gives us a piece of information that we can trade off of too. So if fundamental bullish news doesn't break a market, you buy it. And the converse is true with bearish news. So the big things operating this week, perhaps a short squeeze in the indexes. Gold's in an interesting position. Gold's kind of right here in no man's land. We like to sell in the 5 to 10 area. We like to buy in the 80 to 85 area, and we're at 92. We left yesterday's market wanting to sell 90 to 92. And that's not right. That was in the morning. Actually, 99 to 01 is where we had to sell yesterday, and the high is 99. So we caught that right in our buy. Yesterday, our first buy was 90 to 92, and we're at 92 right now. So we did a pretty good job of catching both sides. Gold, the retail account still buys. The large institutions are on the sidelines with gold. Gold, everybody says Bitcoin, trade Bitcoins out there. Gold is really the Bitcoin if you want to protect yourself from central banks. So retail accounts buy gold because of what their governments are doing to their currency or potentially can do to it, or from war. Okay, value area highs up here at 1301. We're at 92. We rejected prices above 97, 98. So 98 to 1300 is S1. 3 to 5 is S2. And on the buy side, we'll make 88 to 90. Buy 1. We'll give it a little room because it's a B. And then 84, 86 for buy 2. Retail sales number comes in higher than forecast, better than forecast. Gold should sell. More people going back to work. Tax revenues higher. Less need to print money. Comes in lower than forecast. The converse would be true. Okay, the euro got hit pretty hard again overnight for an overnight session. The selling based on Draghi's statements from last week is still on. No one's backed away from it. As forever, I like the short side of the market first. Never seen a sell in the euro that I don't like. It doesn't mean it can't rally. But we've made a lot of money when the market has rallied 50 to 75 ticks, selling into that and prospering. Okay, looking at this screen right here, you can see that this 37.40 to 50 area is pretty good resistance. We had that as our first buy last night, 40 to 50. Leaning against support, and they busted it. We went out last night wanting to sell 70 to 80, and we just touched 70, so we caught the upper end, and we did like the short side better. Why? Because the market had been selling before that. No magic. 37's a round number, so 90 to 137 even will be buy 1. 70 to 80 will be buy 2. Quite a spill here. Rotate up was 15 to 17, so we'll make 15 to 25, sell 1, and then 40 to 50, sell 2. Obviously, we like sell 2 better because that's structural resistance. And we always like to sell higher, right? When forced to buy lower on this one, I think we got a shot at that 75 area plus or minus based on the way it's going right now, but we do have news to come through. So if the retail sales number comes in as forecast, probably will add a little selling pressure to the euro. Okay, crude oil is up. The finger pointing between the different factions continues in the Ukraine, eastern Ukraine, and Russia. Russia has called for mediation, negotiations, etc., to settle this issue, obviously in Russia's favor, what they would want. And they control the checkbook, they control the natural gas, they control the armies around it. They probably are going to get their way. We like the 25 to 50 sell area, and 75 to the buck. We managed to get up above 101. The market is giving us higher highs. The other side that might work is that our economy is actually starting to grow and increase demand for crude oil and petroleum products. That's a possibility too. And I hope our economy grows. I mean, this is pretty damn grim when you think about what we have to put up with these days of very, very low growth. We've had very lackluster growth coming out of a very, very deep recession. And that's a reflection of industrial policy. These people get, it is absolutely amazing that these politicians get out there and can make speeches about the cause and the demons that are bringing us a weak economy, and it's their industrial and their tax policy, period. But they can get out there and have different boogeymen to rail against, and it's them. But they will never share that information with the crowds that they're pontificating in front of. There is no recession around Washington, D.C. None. Real estate prices going up faster than inflation. Businesses are prospering, small businesses and large businesses, especially large businesses. So they live in a different world. Okay, we are pointed higher, obviously, around numbers 1900, so 99.50 to 101.50 is going to be sell one, and it's strictly off of profit taking. You'll see the other side of the market there, and then we'll make 4 to 6 for sell 2. Market has a habit of going to 3, where they gun all stops above these round numbers, but the market is pointed higher. We like the buy side first. Now, retail sales, which is lower than last month's plus 1.1, but still at plus 0.6, it's a pretty healthy number, ex autos. So that's where we have it. 90.92, maybe a little weakness, so this 93.91, buy one. Hope to buy it on the cheap on some sort of reaction, and 85.87, buy two. We came in last night wanting to 88 to 90, which was below the market. We were going to sell failure if they couldn't extend and make new highs, and the market did make new highs. Okay, it'll take at least 10 minutes to get everything out and up. 99.50 to 01.50. They are new highs. The trade right there is just profit taking, nothing more. People that have ridden this up into 1900, it's a market number. It is going to bring profit taking, bird in the hand, etc. So that's the only play there, but we do like the buy side first. Back with you as soon as I can get my chores done.